Hey, welcome back to my channel. This is Peter Zafra. It's been a long time since my last video, and I know that I was gonna do some updates, but so many things have been going on with the world, with life, and so here I am. And the last time I posted a video, I said for you guys to post your questions on the email that I list in the bottom. It's actually less than 360 at gmail.com. And if for you guys that are wondering what less than 360 means, is that it basically derives from paying off your house in less than 360 months at gmail.com. So it's less than 360 at gmail.com. I will put it in the description below so you guys will have it. So any of you guys that have any questions or concerns or anything, to real estate nature, go ahead and shoot that way. Anyway, so yeah, it's been a long time. As many of you guys know, the market has shifted. A lot of the housing market has gotten a little soft. We don't know exactly how much it's gonna keep getting soft, but nevertheless, we are in fall now, so the market has slowed down, especially with the rates going up. I mean, now we're like in the mid to high 6% rate on a 30-year fixed. 6%. Yep, the time has come, ladies and gentlemen. So anyway, I just wanted to answer a few questions that a lot of people have sent to me, and a lot of those quite simple to answer, really. One of the questions, most famous question, is: Are we headed on a real estate crash? And the answer is, to be honest, I don't know. Definitely a correction is coming. Definitely a slowdown is occurring, if not about to occur in some areas. But for the most part, it has slowed down. It is nowhere as busy as it was last year. And, but people are still buying houses. I mean, it's just that the biggest difference is that the rates now are much higher. I mean, there's no more 2% loans. There's no more 3% loans. There's no more 4% loans. So people ask me about the crash. Is it going to come? I don't know what's exactly going to happen, because all the notes that are being written right now are still full docs. And what that means is that they make sure you are qualified based on your debt ratios, your income, your capacity. Like what I've always talked about before, credit, collateral, capacity. So your score still matters. What you make every month still matters, versus your debt load. All that stuff still matters. However, there are some new programs that have come out that have made it a bit easier for people that have income problems, which, if not used properly, or if not done properly, it could cause a problem for the future. Because if you're simply buying a house just to buy a house, and you can't afford the house at the end of the day, and you lose your home, then you will contribute to the housing market crash, or correction is what I like to call it. In terms of a crash, I don't really see a crash, but I do see a big correction. When will it happen? I don't know. Okay, so that answers that question. Another question I was answered is: should I buy a house today? And my answer to that question is: if you are ready to buy a house, if you can qualify for a home with your current debt load, your current income, your current credit score, yes, buy a house. Because if you haven't bought a house yet, then that means you're currently renting, and rental properties, if you haven't seen it yet, it's going to go up a lot in the next year or so, in the next 12 to 18 months. With the rates going up, it's going to be it's all across the board. It's not just home loans, it's credit card loans, auto loans, student loans. It's all across the board. There's not like a particular one that they're going to be like, oh, we're going to raise the rates on housing and that's it. You got to remember, when the feds raise the rates, all the rates go up. And that includes your money in the bank. So instead of you making a penny every month, you'll probably make 6 cents. Anyway, that's a joke. But bottom line is, yes, if you are ready to buy a home, and you're not gonna, and you can afford the home, buy a home. Because a home is a long-term investment anyway. in terms of owner occupied. I'm not talking about investment properties, I'm talking about owner occupied. And of course, eventually the rates will taper off, the rates will drop a little more. Then at that point, then you can exercise your options to refinance again. So that answers that question. Let me see, what else do we have here? Another question is, should I buy my rate? Should I do a buy down on rate? And the answer is, it depends on how long it would take you to recuperate that cost. So I would make it as simple as I can. If your par rate, which is your rate with very little or no points involved, is $30 cheaper than you paying, I don't know, $4,000 to save $30 a month. Well, what you want to do is take $4,000 and divide it by 30. Okay, so that means it would take you 133 months to recuperate that cost. So you take $4,000, which is the cost to get the lower rate, which is called a discount point. You divide it by $30 a month, because that's what you would save if you paid $4,000 on your note, and that equates to 133 months. So in that case, 133 months is also known as 11 years. I would not pay that discount point of $4,000, because if you're only saving $30 a month and you're paying $4,000, it would take you 11 years to recuperate the $4,000. And you know, the rule of thumb is usually people refinance between 3 to 5 years. So you're twice over that limit. So I would not pay that. So what you want to do is, let's say your discount point is a couple thousand, but then you'll recuperate the cost within 18 to 36 months. Then at that point, you could exercise that option. But what I always tell people is, you want to stay as liquid as possible. Stay liquid as possible. Okay? So my next question is, another one is, should I get impounds? Impounds are your taxes, insurance, or both taxes and insurance. And what that means is that there's going to be a separate escrow account set up by the lender, and then every month you're going to be paying a portion towards those two accounts, your taxes and your insurance. So when that comes due, they will disperse the funds. The good thing about having that is you don't have to worry about it anymore. It's a part of your payment. And so at the end of the 12 months, when your insurance premium is due, escrow takes care of that. Same thing with your property taxes. Escrow takes care of it. If you are a business owner, like myself, I'm self-employed, you could look at that option, because you may or may not be getting chunks of income throughout the year. So if you're one of those where I'd rather pay my insurance on my own, or pay my insurance or my taxes on my own, then that's an option for you to take a look at. However, if, let's say, business is slow or whatnot, and next thing you know, taxes are due, you need about $4,000 and you don't have that, that could be an issue. Again, you want to look at exactly where you'd benefit from and make that decision from there, and always ask your lender if there's a cost to do no impounds. Sometimes your rate or cost will be a slightly higher, because they're taking a quote-unquote risk by allowing you to take care of your taxes and insurance on your own. So those are the things you want to take a look at if and when you decide, or you're in the position to decide, whether you take impounds or not. But most people take the impounds just because of the convenience factor of things. I mean, a lot of people will say, I'd rather control my money. Well, if that's the case, then more power to you if you can handle that. But an average American does not really have that ability to be able to just, hey, I'll pay it on my own. But again, if you can handle it, do it. And also, don't forget to check on the cost on that. So, yeah, those are the biggest questions that's been getting hammered or sent to me, so to speak, on my emails. Again, feel free to send me a message. Just email me. I'll try. Like I say it all the time. I want to upload as more frequently as I could, but of course, with everything else, just like you guys, life is busy. But I'm gonna try my best to be able to, upload as much as I can. But those are the biggest questions that have been getting asked over and over and over again. So again, if you guys have any questions, feel free to post it down below. If you guys like this video, please give me a thumbs up, subscribe so you'll get updates on videos. And if you have any mortgage questions, shoot me an email below and I'll try my best to answer for you. In the meantime, this is Peter Zafra, and lender from California, by the way. So if you need any questions, holla at me. Anyway, guys, be blessed. I'll talk to you guys soon and stay safe.